Hello there, this is the Bookkeeping Master on YouTube. Welcome to another video in this How to Prepare Financial Accounts series. If you've joined the course here, go back and watch from the beginning. You'll learn a lot more if you start from the beginning and watch these videos in order. In the previous video, I went through the bookkeeping, completing the bookkeeping. That is the first step to preparing year-end accounts, is ensuring all of the bookkeeping has been done, and I covered that in detail in the previous video. So what do you do now? If the bookkeeping is all done, what is the next step? It is reviewing the bookkeeping. It's looking for mistakes, it's looking for errors, and it's correcting those things. And the way to do this is to review the activity on each of the nominal accounts. And to help you identify potential errors, mistakes, things that need correcting, I have a number of slides that will teach you the most common mistakes that are made when doing bookkeeping, things to look out for. Now, when you're reviewing the bookkeeping, you may be tempted to make a face like this. What were they thinking? Don't they know what they're doing? But try and be patient, try and be understanding, because even I, the bookkeeping master, the master of the books, when I've reviewed my own bookkeeping, I've spotted mistakes. Even the best of us make mistakes. So try and be patient, understanding. There's always going to be things that aren't right, even with the best bookkeepers. But the first thing to really look out for when reviewing the books, reviewing the accounts, is misallocated or misposted transactions. So it's very common to see transactions that have been posted to the wrong account. For example, there might be software expenses which have been posted to the subscriptions expense account, or net wages payable transactions that have been posted to the gross wages expense account, and lots of other things. So look for misallocated, misposted transactions. What else? Assets which have been posted as expenses. This is very common. Whoever was doing the bookkeeping, the client or the bookkeeper, it's quite common that these people don't actually know the difference between an asset and an expense. And anything that's going out of the bank, they consider an expense, and it shows on the profit and loss as an expense. But assets obviously need to show on the balance sheet as asset additions. So you'll need to move those transactions from the P&L to the balance sheet. Common assets that are posted as expenses are things like computer equipment, office furniture. They think they are an expense, so they post them as an expense. Look out for assets and ensure they are corrected and posted correctly. Look at the asset accounts too, because sometimes you might see expenses posted to the asset accounts, so it can work the other way around as well. Okay, missing wages journals. Now, I chose this photo intentionally because this is how I feel when wages journals are missing. And I feel like this for two reasons. The first reason is if the wages journals are missing, then the client hasn't been producing management accounts, or if they have, they haven't been accurate. And that's a real shame, because one of the reasons we do the bookkeeping is to create management accounts. It helps us to know how the business is performing on a month-by-month basis or quarter-by-quarter basis. And they are a key source for planning and analyzing the business performance. So if they don't have management accounts, it's frustrating. It's a real shame, because there's all this financial information that could be very useful to them. Now, the other reason why this is frustrating, this is the biggest reason, is if the wages journals are missing, it means I have to do them. And wages journals can be very time consuming, and they can also be very messy. But it is quite common for wages journals not to be showing in the accounts. They've been omitted. If they're not showing, you'll need to do them. If you need some help with wages journals, I'll put a link in the description below, because I have a free course, once again, a free course that will teach you all about wages journals, how to do them. Now, most payroll is done once a month. Most companies pay their employees once a month. So there should be 12 sets of wages journals to do for a financial year, for a 12-month financial year. But if you have a company that does the payroll more frequently, there's going to be more than 12 wages journals to enter into the accounts. So look out for this one. This is very common. The wages journals to be omitted. Personal transactions. This guy's looking a bit shifty. Should I put this through the business or should I not? This is the other common area that needs correcting. Personal transactions showing on the company accounts. If something is not wholly and exclusively for the business, it's likely personal. The biggest personal transaction I think I ever saw in a set of accounts was someone put their double glazing for their home through the business, or tried to anyway, until I spotted it. I think it was £22,000 of double glazing they had put through the business as an expense. Obviously, I had to get rid of that and take it out of the financial accounts. You need to look for those transactions. We're not trying to interrogate our clients. Just look for things that are obviously personal and remove them. If things are questionable, then you can ask the client about that. Some things are harder to spot than others. For example, I've had clients in the past who have had holidays and they've put the accommodation and the travel costs for those holidays through the business as a travel expense. And I've just had to ask the client, was this a personal holiday or was this actually a business trip? And then they can provide the relevant information. So look for personal transactions. If they're not wholly and exclusively business related, then they need to not be included in the financial accounts. Okay, missing tax payments. This is another common error. For some reason, when tax is paid, people don't know where to put that payment, and it's generally allocated to the P&L as an expense rather than against the liability account for tax. So missing tax payments. Another common mistake when it comes to tax is if a business has received fines, penalties, interest for late filings or late payments, those things are generally omitted from the accounts for some reason. So they will need adding to the financial accounts. What's next? There's lots, isn't there? Drawings and dividends. Another common error where drawings and dividends show on the P&L as an expense, when obviously that's not the case. They need to go to the director's loan or against retained earnings under the equity section on the balance sheet. So look out for drawings and dividends and where they've been allocated, because that will need correcting. Now, we have one slide left, which is my favorite one. I'm old, and I like it. Being older is fantastic. I love my life more and more the older I get. Life gets better with age. But when it comes to financial accounts, something that is old is generally not a good thing. Let me explain this. Run an age debtors report, run an age creditors report. You may see some very old invoices showing as outstanding on those reports. This could mean one of three things, really. The first is that it's correct, that they haven't paid the supplier, even though the invoice is 3 years old, or the customer still hasn't paid them, even though you invoiced them 5 years ago. So it could be that it's correct, and if it's correct, then you can leave it. Another thing it could mean is that it needs writing off, that these are bad debts, that the supply went bust, so you never had to make payment, or that customer's not going to pay, so it needs writing off as a bad debt. The third thing it could mean is that it's a mistake. Some sort of duplicate invoice was created at some point, which then shows as outstanding. In that case, that needs correcting. So look out for older transactions in the accounts and then correct them. You may find there's older assets too. This is very common, that there are assets showing on the accounts that still have value even though they were purchased 5 years ago. And those assets no longer exist in the business. They were disposed of. So that also needs correcting. Look out for these older things. Okay, hopefully this helps. I do have one final thing to mention before we close and move on to the next video. And that is, if you've tried to do the bookkeeping yourself, if you're trying to prepare the year-end accounts yourself, and it's just too much, I'm here to help you. And there's a couple of ways I can help you. Number one is, I am an accountant, and I do provide bookkeeping and accounting services. So if you'd rather just me take over, drop me an email. My email is on my website. Another way I can help you is I can train you one-to-one. So if you're looking to be an accountant and do year-end accounts and you need some help, I'm here to help you. If you're doing your own accounts and you need some help, I'm here to help you. I can provide one-to-one training online. I also offer an email support service where you can send me your questions by email and I'll answer them. It's like a 12-month subscription for unlimited questions. So I am around. All the details on my website, just go and have a look, and I'll speak to you in the next video.